Good afternoon and welcome everyone to our Saturday training. I think you're going to get a lot out of today's training, especially taking full advantage of your home-based business. Today we're going to talk about the tax implications of owning a home-based business and how that can translate into thousands of dollars in savings to you. As many of you have heard me say without question, network marketing is the very best opportunity for people to achieve financial independence, which ultimately leads to what each and every one of us is looking for. And what we are looking for is true time freedom. In my opinion, it really is not even the money itself. For most of us, the concept of millions of dollars is foreign and not something that we can easily get our minds wrapped around because the numbers are so very big. We do, however, realize that money will allow us or provide us time freedom, the ability to do what we wish to do, when we wish to do it, and not be a slave to someone else's schedule and expectations. The very first step in achieving financial independence and true time freedom is to discover your own why and be willing to take action to improve your future. It is so important for people to make the shift in mindset from looking for a job to finding the right opportunity. The current job people may find themselves in or the next job may allow us to make a living and pay the bills, but it will never allow us to create our fortunes. Only the right opportunity will allow us to do that. I only need to refer back to the 40-year plan as evidence. The 40-year plan goes like this. By the time that someone reaches the age of 25, most will have an idea of what they may wish to do for their adult occupation or profession. That leaves the time between age 25 and 65 to pursue their 40-year plan. As the studies show, the results of the 40-year plan are just absolutely astonishing to me. Out of 100 people, the results are as follows. 5 out of 100 people are still working. 36 out of 100 are dead. 54 out of 100 are dead broke. 4 out of 100 are fairly well off, what people would say, hey, they're comfortable. And 1 out of 100 are wealthy. I think the tragedy is that we have all been programmed and taught to pursue a plan that only works for 1 out of 100 people. I don't know about you, but I am not willing to risk my adult life pursuing a career that only works for 1 out of 100 people. I am as competitive as the next guy, but I am not willing to take that risk. I am not willing to take that risk because for 99 out of 100 people, there is no do-over. So I say it's okay to work full-time to make a living, but it is important and crucial that all of us start working part-time to create our fortunes. Today, as I have stated, we will be focusing on tax implications and the advantages of having a home-based business and why most people cannot afford not to have and participate in a home-based business. Before we begin, obviously I'm not an accountant or a tax professional. And the following topics that we discuss are merely typical, customary, and accepted by the accounting and tax planning community. I certainly urge each and every one of you to consult a tax professional to discuss and have them prepare your taxes to best take advantage of the deductions that are available. The following deductions are available to you because you are a network marketer, which classifies you as a home-based business owner. In order for you to be recognized as a home-based business owner, all you need to do is merely declare yourself as a home-based business owner. You do not have to create a corporation, incorporate, or even file a DBA or doing business as. In addition, in order to take advantage of all the allowable deductions related to your home-based business, you only need to have the intent to be profitable or create a profit. By doing so, you can take advantage of virtually every deduction we'll be talking about without having to actually experience profits. The following 6 areas will be our focus for today: home or residence, automotive expenses, entertainment and meals, business-related travel, health insurance premiums, and business equipment and other. With proper attention and a little bit of record keeping, most network marketers or small business owners or home-based business owners will be able to easily keep an additional $3,000 to $5,000 in their bank accounts rather than paying it to the IRS through taxes at the end of the year. That is over $200 to $400 per month in your bank account rather than in Uncle Sam's. The first area are deductions related to your home or residence. There are two accepted methods of calculating your deductions related to your home or residence. The first method is to take a percentage of your total square footage that you are utilizing for your home-based business. As an example, if you live in a 2,000 square foot home, and let's say the home office that you are utilizing for the pursuit of your home-based business is a second bedroom or a den or a study or maybe even a basement, and that designated area is 200 square feet, that would represent 10%. 200 square feet divided by 2,000 square feet, 10% of your total residence. Utilizing that calculation method would allow you to take all of your expenses related to your home or residence and deduct 10% of those expenses. The second method of calculation is using a ratio-based formula. So as an example, if your home has a kitchen, a dining area, living area, maybe a family room or great room, and 3 bedrooms, you would categorize your home as a 7-room residence. If we take into consideration that same single room that you are utilizing in pursuit of your home-based business, that one room now represents 14.3% of your total residence because that's one room out of a 7-room residence, and they don't count the restrooms as a living area. So now you would be eligible to take all your expenses related to your home or residence and take 14.3% of those expenses as a deduction for being involved in a home-based business. So let's see how the numbers work out. Let's say you have a $1,500 a month mortgage. Now, depending on how long you've been paying on your mortgage, a great percentage of that is going to go to your mortgage interest. So let's say you have $1,200 out of that $1,500 that is being applied as mortgage interest. That means that you'd be able to deduct 14.3% of that $1,200, or roughly $172 per month, and take that as a deduction based on your home-based business. In addition, property taxes are also deductible using that same percentage formula. So let's say your property taxes on an annual basis runs you $10,000. Well, you take a little over $800 a month and apply the 14.3%, and now you'd have a deduction that's right around $119 per month because of property taxes. In addition, if you, as an example, live in a condominium where they have a condo association, or maybe a townhouse or a home with a homeowners association, those dues, you can also take a percentage of those dues, the 14.3% in the example that we're using, and that would also be a qualified deduction. If you rent or lease property, you are still eligible to take a deduction for a home office. You would merely calculate the percentage of the property that you are utilizing dedicated for the pursuit of your home-based business and deduct that from your taxes. So if your rent or lease payment was $1,200 per month, you would take the percentage of that payment that represents the area that you're utilizing to pursue your business, and that would become an eligible deduction. Certainly, your utilities are an eligible deduction. So your gas, electric, water bill, if you have a telephone line in your residence, all of those would be a qualified deduction. You would just apply that same percentage. So in the example that we're using right now, you would take all of your utilities and multiply that by the 14.3%, and that would be what you would deduct from your taxes. Well, let's say all of your utilities combined runs you $300 per month. At 14.3% of that, it allows you to take an additional $43 a month in deductions. In addition to your utilities, certainly maintenance costs and repair costs are a deduction. So you would simply apply the percentage to those costs, and those are also a qualified deduction. Lastly, in regards to your home office, you can take deductions and or depreciation of what most would consider to be customary furnishings. So if you buy a desk chair, if you buy lamps or other lighting, and any other customary furnishings would be a qualified deduction. Next, let's move on to the deductions that are available in relationship to your car. There are two different accepted methods of calculation for your automotive expenses as well. The first method is to take a flat mileage allowance. For each mile that you drive that is business related, you would take a flat dollar amount and multiply that by the miles you drive. In the tax year 2012, your allowable mileage allowance was 55.5 cents per mile. In tax year 2013, they've actually raised that just a little bit, and now your deduction or your allowance would be 56.5 cents per mile. In addition to that, even though you're taking a mileage allowance, you are allowed to deduct 100% of your tolls and parking on top of your mileage. Let me give you a great example of just how much these deductions can be of value to you. We're doing our training in an office in Chicago, and one of our brand new consultants has elected to join us for our training. He has also elected to bring one of his prospects, and just on a side note, she has already signed up in the process of today. But in going to pick her up, driving to the office, then dropping her off, and then returning home, he will have probably driven 120 miles today. Based on taking a straight mileage allowance deduction, 120 miles times 56.5 cents, he has a deduction just for today's driving or travel of nearly $68. Now throw on top of that the tolls that he's paid today, and just for his travels today he will be eligible to take a $70+ deduction. Another example is of a couple founding consultants here in Chicago, and they network full-time. So in any given month, they average nearly 700 miles just for business. Even if they take just a basic mileage allowance, that's creating nearly a $400 per month deduction off their taxes. Let's say you average 100 miles a week. Little over 400 miles a month. That in and of itself is going to produce a monthly deduction of over $230. Now the second method of calculating is to total up all of your expenses related to the operation of your vehicle, and then coming up with the percentage based on, hey, out of all the miles I drive in a year, what percentage of those miles are business related? So let's say you drive a total of 12,000 miles in any given year, and that 50% or 500 miles per month or 6,000 miles per year is related to business. You would then take all of your expenses related to operating your vehicle and take 50% of that, and that would be a qualified deduction. So what can you include as part of the cost of operating your vehicle? Depreciated value of a vehicle, a percentage of your payment if you are financing or are on a lease. Certainly fuel costs, gas costs, oil changes, tires, wipers, air fresheners, car washes, yearly registration fees, city stickers, and certainly a percentage of your auto insurance. As you can see, that number can quickly add up and represent a substantial deduction. The next area that we want to look at is entertainment and meals. Typically, there's a fair amount of questions that come up in relationship to this area, and just a little bit of controversy in what is deductible and what is not. Certainly, if you decide to conduct business over a lunch or dinner, and you decide to pick up the tab for lunch or dinner, that is a qualified deduction. Currently, you can take a 50% deduction of the actual cost for that lunch or dinner. Let's say you decide to conduct business over a round of golf. If you decide to pick up the greens fees for yourself and, of course, your prospect or team member, you can take 50% of those greens fees and take that as a deduction as a business expense. Certainly, any costs related to food or beverages during that round of golf would also be taken as a deduction at 50%. Now let's say that you meet in an office setting, have a business meeting, and then decide to go to a sporting event. Maybe that's before the meeting or after the meeting. As long as that entertainment happens directly before or after a business setting or business meeting, you are entitled to take 50% as a deduction for business expenses. Another area that brings up a fair amount of questions typically is business-related travel. Let me try to explain it by example. I'm based in Chicago, and let's say I have someone in Seattle, Washington that invites me to come out to speak to them about WebDocs Network. My airfare certainly would be deductible at 100%. My overnight stay at a hotel would also be deductible since that is travel lodging. If I needed to rent a vehicle or take a cab or take a bus, those would all be eligible deductions as well. I meet the individual over dinner and I pick up the tab for dinner, that would be deductible at 50% of the actual cost. Now here's where a lot of questions come up and a lot of times people get themselves into trouble. Let's say I decide to stay a couple days after my meeting, or I decide to go to Seattle a couple days prior to my meeting. That's perfectly okay, and all the expenses and deductions that we've talked about so far are still eligible. The thought process kind of goes like this. Regardless of whether I went out there a couple days early or decided to stay a couple extra days, the cost related to having the meeting would not have necessarily changed, meaning I still would have had to pay the airfare to travel to Seattle, Washington. I still would have incurred the overnight stay at the hotel. I certainly would have incurred the cost of having to rent a vehicle or a cab fare or bus fare or subway fare, and certainly would have incurred business meals or entertainment costs. Where people get themselves into trouble is when they try to write off the expenses related to the personal part of the trip. The next area can also represent a substantial savings or a substantial deduction for the home-based business owner. As a home-based business owner, you are entitled to write off your health insurance premiums. And what's funny is that allowable deduction percentage has slowly risen from 30% in 1994 to today in tax year 2013. You can write off 100% of your health insurance premiums. Now, if you're a business owner and you find yourself paying $300 a month for your personal health insurance, 100% of those premiums are tax deductible. Now there's also a majority school of thought that says if you are working full-time to make a living while you are working part-time to build your fortune and you're working for company XYZ, you are participating in their insurance program. The company may be paying for the majority, but you are also responsible for paying a portion. Now that may be done in the form of a payroll deduction. As a business owner, you very well may be able to write off the portion of the premiums that you pay through payroll deduction against your home-based business. One caveat to the health insurance premium deduction. Those deductions are in fact in relationship to your profit for your home-based business. Okay, let's move on to business-related equipment and other. Certainly if you purchase a laptop, an iPad, a tablet, even a new cell phone, or add a second line or a second cell phone number, those would be deductible since they are legitimate business expenses. In most cases, even the sales tax that you paid to make those purchases would be deductible. Any office supplies would certainly be deductible, and again, in most cases, even the sales tax related to making those purchases would be deductible. Now, falling into the other category are what I call some very important and fun items. Many of you have heard me say over and over that network marketing is as much about self-development as it is about being successful in a home-based business. I certainly encourage everyone to start a journey of self-development. That means reading books, listening to CDs, watching DVDs on topics that will help you, which ultimately will help your business. Attending seminars and conferences, improving communication skills, developing higher levels of motivation and discipline. Additional skill sets and tools that will allow you to help people find what they want and need so that ultimately what you want and need will find you. Of course, all the costs of the materials as well as the fees for attending any conferences and seminars are completely tax deductible. Lastly, any fees related to professional services, such as attorney's fees, accountant fees, are certainly tax deductible. As you can see, there are huge advantages to have and participate in a home-based business. Most tax experts will share and confirm that today, more than any time in recent history, we have the greatest and the most generous incentives to pursue and participate in a home-based or small business. This is partly due to our economy and Congress realizing that ultimately the growth and participation of home-based businesses and small businesses will generate more commerce, more tax revenues, and will improve the overall economy. It is clear that with just the items we talked about today, the average network marketer can take advantage of nearly $1,000 in deductions per month. Regardless of what tax bracket you may fall into, it will allow you to keep an extra $3,000 to $5,000 in your bank account rather than in tax payments. Remember, regardless of whether you realize a profit or not, your monthly WebDocs Network consultants fee of $49.95 will allow you to keep an extra $200 to $400 per month. To be blunt, it would be very foolish for someone not to spend $49.95 a month when there are incredible incentives allowing you to keep an additional $200 to $400 per month. With our Refer 3 and yours is free, you may only pay the $49.95 once to have your zero-cost profitable business. For those that may be thinking, hey, I prepare my own taxes and I'm not sure I'm qualified or feel confident to prepare this type of return, my response is simple. Doesn't it make sense to engage a tax expert who specializes in preparing taxes for small business owners and pay that individual $200 to $300 for the preparation of your taxes rather than you spending hours on end frustrating yourself and potentially creating a situation where you're not taking full advantage of the deductions that are available? In addition, that time for you may be better spent in continuing to grow your business and supporting and training and counseling your team. A great deal of what I want each of you to walk away from today is that you have a phenomenal opportunity. And in order to take full advantage of our opportunity, you have to treat it like a business and not a hobby, and start to act like a business owner. Just one area of owning a business is certainly taking advantage of the tax deductions available as one of the best financial advantages you have being a business owner. This does require a shift in mindset and a shift in behavior, and that is all part of the self-development and growth you will experience. The question really comes down to, Can you or people you know and care about afford not to be involved in a home-based business, especially ours of creating wealth through health? And with that, I'm going to end our training for today. Once again, I want to thank each and every one of you for joining us on a Saturday. Hopefully you found a lot of helpful information, and it's going to be vital that you get all of your team members and all of your prospects to review this training. My wish is for all of you to have a fantastic week, and we'll see you all on our next training.